Alright, looking at the yen pairs from Monday 23rd of October. We don't get any setups for the first hour. Then when this second macro opens, we get an Asian range break. That would have got you in on the GJ, not the EJ, because we didn't have the break. And that would have been a loser. Okay, and immediately after that, we get an Asian range fake setup. The only problem with it, again, is because the engulfing candle is so big, it's unlikely you're going to get a decent fill. So that would be where you put your limit order, and you see it doesn't fill until price comes all the way back down here and then reverses. And by this time, price is tapping back to the POC and the midnight open in this case. You know, that's enough of a target for you to take this off the table. So you would have got one loss on the Monday on the GJ. Okay, so that's that going up. So on the next macro, this is the third one, we have Asian range low taken, prices come up to above midnight, seems to be rejected. It's created this small structure. So when this closes at 8:05, we're breaking that 5-minute structure after rejecting midnight and having taken liquidity. So we're looking for longs on the GJ or EJ at 8:05, and you'll see at 8:05 that puts us here. So there's not really a very good setup from here. You'd put your limit order there, which wouldn't get filled, and on the EJ 8:05 is here, so price is already gone. There's no decent entry. Okay, why? Because we need a pullback. So where's the logical pullback place? It's below liquidity into an order block. So you'll notice that we got the signal for an EJ long here, and this is where we want to enter it, but the entry doesn't come until 2 hours later. So be mindful of that when you're trading. Be patient, because you can get the perfect setup if you're willing to wait, in this case, 2 more hours. Okay, so that's the third macro. The main problem with it was that it was just too late. Okay, so we haven't even got a close below the ODR here, but the GJ also hadn't closed, but you know, most of the move has already gone. There's no decent entry in there. Again, the best place to enter this would be at least this POC, which coincides with Asian high, or a liquidity take is always preferable. And you got one, but you didn't get the other on that. That's 1 hour later. So move on. This is the next one. There's not really a clear setup here. You could just look for a continuation trade. So when you come here, this is 850. So we're in the fourth macro. Everything about this is saying short the yen. We took liquidity, rejected off midnight. Now we've got the ODR confirmation. So you could say, okay, from 850, any decent yen short setup, I'll take. So that puts you here. Okay, so you could, like I said, you could, there is a decent argument to take it. Just at the close of this, put your stop a couple of pips below, 10 pips, in case this liquidity gets taken, and you would have at least got to put your stop to break even before it goes against you. And on this one, it wasn't really a good setup, so I won't go into that. Okay, and then finally on the fifth one, this is where you get probably the best setup of the day if you're relying primarily on your yen index for the signal. So what happens is price comes up here, wicks here, so it creates a double top. That's the first thing. Okay, double top of what? This London first hour high. But if you wait until this to happen, so you're still in your macro, 10:05 close, we see a very clear take of Asian high liquidity. So now we have session liquidity, and we've taken out this 1, 2, 3, 4, 5 wicking candle. So that's a decent candle. If you want to be safe, just wait for the next 5 minutes to close. So that's a 10:10 close. We have a very strong case to short the yen again. So what kind of things we're going to be looking for at 10:10? Basically, liquidity takes and premium. So this is the GJ, and that's 10:10. Do we have a liquidity take? Well, there's some liquidity there. That's the London, what do you call it, first hour taken out. Then you have this beginning of European session also taken out. The only thing going against you, or not confirming, the only thing suboptimal is that we haven't had a Asian range take. So what you do, you look at the EJ to see what the situation is there. So you'll see EJ is a lot more bullish. So between the two, the GJ is the better trade. Why? Because we've come into a much deeper discount. And the fact that this is holding lends some confluence to the expectation that GJ should take off as well. This is actually quite a good trade in its own right, because it's basically just an ODR break. So that ODR break gives you the bias for the session. I'm looking for longs. Where am I looking for longs from? Some kind of a discount. I'm not sure if this is... Yeah, this is actually a very good discount. It's a lot deeper than it looks. So that's almost a deep into the final third discount. It's definitely below 50%. Okay, so you're taking out this liquidity. There's just that little 5-minute liquidity here, but we also have this order block. So that is the best trade. That's a very clean trade that you could have taken either that or the GJ. Okay, so that's Monday, and that would be those would be the trades you take if you're waiting just for your yen index to give you the setup. But if you look at it, it's a bit messy. Yeah, there's a clear signal here, but then for the entire 2 hours here, we're not really clear what's going on. Whereas if you look at the individual pairs, you can get decent, very clean setups, which, as long as they're not contradicted by the yen index, you can still take. So for example here, what we had, the first macro opens and closes with nothing, but then immediately after it, we've got session liquidity. Okay, and that's always the best thing that we're looking for. So number one, session liquidity. After that, we've had a break of structure here, 5-minute break of structure. So this is one of the advantages of if you just trade the 10-2, 10 past, you have to spend less time at the screen. You might think that you're missing optimal entries, but if you see the entry here, so basically we had session liquidity. If you saw that there, you may have tried to get in here, and in hindsight, you may have got away with a few more pips. But this trade here is much stronger because we've had 1, session liquidity, 2, 5-minute break of structure, 3, a retracement back into discount, which happens to coincide with the Asian POC. So we get 2 bars down, 2 wicks into that area, but failure to close there. And yeah, you could enter there with your stop below midnight. That's less than 10 pips. So that is actually the best trade of the day. Okay, so that was in the second macro where we didn't have a particularly clear signal. What we had exactly was this. So we had price coming up to midnight. So when price comes up to midnight, it can do one of a few things. So we ideally want to see it rejecting from midnight, but we haven't seen that happen yet here. But it's not contradicting the EJ. So you can think about taking that if you want. Sorry, that was the EJ. The GJ we didn't have. The GJ actually also had a pretty good setup. The only difference is because we hadn't taken session liquidity, the EJ was more preferable. But this, if you look at this, price has gone up, it's closed above the Asian range. We've come down into a very deep discount. Look where this wick is occurring. So it's occurring in this order block, which also coincides with the Asian POC. And this candle here is, that's your midnight open. And it wicks to perfection.